All right, today we're tackling a huge topic, emerging markets. And really, it's a story about a two-sided coin. On one side, you've got this absolutely massive opportunity for growth, but you flip it over, and on the other side, there's some very real, very significant risk. To get the full picture, you really have to understand both sides.
So let's just start with the big question, right? In a world where all the developed economies, the US, Europe, Japan, are kind of slowing down, where on earth is the next wave of real growth going to come from? I mean, for anyone thinking about investing or business, this is the question. And the answer, more and more, is pointing in one direction.
And the scale of that answer lies right here. In this number, a mind-boggling 85% of the entire world's population lives in what we call emerging and developing economies. Now, that's not just a statistic, It's the whole foundation of the opportunity. It's the vast majority of humanity, and their economic potential is just now, finally, starting to be unlocked.
So what do we actually mean when we say emerging market? Well, think of it as a country that's on a journey, right? It's moving from a developing state towards a more advanced, modern economy. The two big tells are rapid growth and a ton of industrialization. But, and this is the part you can't forget, that incredible growth comes hand in hand with higher risk. That trade-off, that's the whole story.
Okay, so here's our game plan for today. We're going to start with the good stuff, the opportunity. Then we'll flip that coin and get real about the risks. After that, we'll look at a massive shift that's happening right now, which we're calling the Great EM Reshuffle, and we'll wrap it all up with how you might think about an investment strategy.
So let's dive into the exciting part first, the opportunity. Why does everyone keep saying that the future of global growth is being written in these markets? Well, the reasons are deep, they're structural, and they're probably going to play out for decades to come. One of the biggest forces at play here is something called the demographic dividend. Just look at this chart. In developed nations like Japan, the median age is pushing 50. Even the US is getting up there. But then you look at a key emerging market like India, and the median age is just 28. 28. That translates into a huge, young, growing workforce and consumer base for decades. It's an engine for both making stuff and buying stuff.
And those young demographics lead us right to this point, which might be the single most powerful economic force on the planet right now. We're talking about billions, with a B, of new consumers entering the middle class. These aren't just factory workers making things for us anymore. No, they are becoming consumers themselves. They want smartphones, they want better healthcare, they want financial services, they want their first car. This creates a gigantic internal engine of demand that's much more insulated from what's happening in the West.
And this whole thing gets supercharged by this fascinating idea called the leapfrog effect. See, these countries don't have to follow the same slow, step-by-step path the West did. They're just jumping over entire generations of technology. They never bothered with landlines. They went straight to mobile phones and 5G. They're skipping brick-and-mortar banks and going straight to digital wallets. This means they can innovate and adopt new tech way faster because they're not stuck with all this old legacy infrastructure.
And this quote just nails it, right? Not having those old systems isn't a weakness, it's actually a massive strength. It gives them a kind of agility and speed that's, frankly, almost impossible in a lot of developed countries that are bogged down by their own success.
Okay, so the potential is obviously huge. We get it. But, like we said at the start, this is a two-sided coin. And going into these markets with blind optimism is, well, it's a recipe for getting burned. So let's flip that coin over and take a really honest look at the risks involved.
And let's start with what some people call the silent killer of returns. It's currency risk. It's a tricky one, often misunderstood, but it can absolutely demolish what looks like a fantastic investment, especially if you're investing from a strong currency base like the US dollar.
Let me give you an example. Let's say you invest in a cool Brazilian tech company, and wow, the stock does great. It goes up 20% in the local currency, the Brazilian real. You're feeling pretty smart, right? Well, what if, over that same period, the real itself crashed by 25% against the US dollar? Suddenly, when you go to convert your money back, that amazing local gain has vanished and turned into a real painful loss.
Let's just walk through the math so it's crystal clear. You invest $100, and let's say that gets you 500 Brazilian reais. Your stock does its thing, gains 20%, so now you have 600 reais. In theory, that should be worth $120. But then, the currency falls 25%, so your 600 reais, when you convert it back, is only worth 90 bucks. A 20% gain in Brazil just became a 10% loss in your US dollar account. That is the silent killer in action.
And of course, it's not just about currency. You've got other major risks to watch. Political risk is a big one. A new government can come in and just change all the rules overnight. Then there's economic risk, things like crazy high inflation that eats away at value, or a government that just can't pay its debts. And finally, you have governance issues. Accounting might not be as transparent, and if there's a panic, trying to sell your shares can be really, really hard.
So we've got the opportunity, and we've got the risk. But the story isn't static. It's not standing still. In fact, right now, we are living through one of the biggest structural shifts in a decade. The actual map of where the opportunity lies in the emerging world is being completely redrawn as we speak. To understand what's happening now, you have to look at how things used to be. For years, if you bought an emerging markets fund, you were basically just buying China. I mean, look at this. At its peak, China made up over 40% of the entire index. So investing in EMs was, for a very long time, just a massive bet on one single country.
But that era is coming to an end. A huge structural shift is happening, and it's being driven by a couple of massive forces: geopolitics, especially the whole US-China rivalry, and this global push from big companies to de-risk their supply chains so they're not so dependent on one country.
And this is giving rise to a whole new investment theme: EM x China. That means emerging markets without China. Investors are now looking much more closely at a whole bunch of other exciting economies. You've got India with those amazing demographics. You've got Vietnam and Mexico, which are picking up a ton of new manufacturing. Indonesia is critical for the green energy transition because of its minerals. And Brazil is still a commodity and agriculture giant. The focus is shifting big time.
Okay, we've gone through the opportunity, we've gone through the risks, and we've talked about this massive reshuffle that's happening. So that leaves us with the final, most important question. What do you actually do with all this? If you understand the risks, but you still want a piece of that growth, what's a smart way to approach it? Let's build a little investor's compass.
Here are 4 key principles to think about. First, diversify, diversify, diversify. Don't try to be a hero and pick one stock and one country. Use broad funds like ETFs to spread your risk. Second, you might want to consider an active manager, someone on the ground who can actually navigate these tricky markets. Third, you can play this reshuffle trend directly by looking at EM x China funds. And fourth, and this might be the most important one, you have got to think in decades, not days or weeks.
This quote just says it all. You can't be an emerging markets investor and check your portfolio every day. The volatility will drive you insane. This is a long-term bet. It's a 10, 15, maybe even 20-year story. It is absolutely going to be a bumpy ride, but the whole idea, the whole thesis, is that the compound growth you get over that long run will be worth all the bumps along the way.
So, we'll end on this note. Emerging markets aren't some weird, exotic side bet anymore. They are rapidly becoming the main event. They are the primary engine of growth, of innovation, of demographic change for the 21st century. So the question really isn't whether this story is important. It is. The real question is your portfolio positioned to be a part of it?